Hey, how's everyone doing? Just wanted to do a quick trade recap of the trade that you're looking at right now. I've already closed most of my positions and I'm going to let the remaining positions ride to the final TP. Um, but I wanted to do a quick breakdown so that everyone can actually see what goes on in my mind when I take this trade. So I'm gonna start from the daily chart. I wouldn't go all the way to monthly, but on the daily charts, we can clearly see that we are bullish. We're extremely bullish. So I'm very much more interested in buys because this is giving me the directional bias of what I should look out for in the lower time frame. Now, when I drop to the 4 hours time frame, I can also see that we have an uptrend. We had this little downtrend going on here, but um, when you look at the full charts, when you look at the bigger picture, you can see that this is just a continuation. We had this liquidity pool right here, which was from FOMC a couple of months ago. And we see how price conveniently swept this low. I'm going to take off this session break so that it's not distracting. But we can see how price conveniently swept this low, and we expect that price is just going to continue on an uptrend. For me, the final draw on liquidity is this level up here. However, in short term, the draw on liquidity is the previous week's high, which is this white line I've marked here. So with that in mind, going into this session, I was looking for just um, an entry level where I feel like most of the buyers are going to step in. And what I use to decide that is by trading session ranges. So I do not trade until it's New York session and after 9:30 a.m. New York time. Um, so what I do is go down to the low time frame, and I use this indicator called ICT zones and pivots, as you can see here. And I use that to determine the London high and the London low. So what I'm essentially looking for is for the London high or the London low to be taken out and to form a reversal to the uptrend. Now, that is the simple bit. Now, for me to have a good confluence, I also need to see. That's why I use the second indicator, which is the ORB, which is opening range breakout. And what I'm looking for is to see how price behaves after the opening range low has been closed below. So we can see that the first candle after the opening range closed down below the opening range low. And normally I would wait for the second candle to finish printing, and that would give me the confirmation. And we can see that the second candle, the price came all the way back up. Now, that's not enough to have an entry, which is why the session ranges, which is what I explained earlier, waiting for the the London high of the London low to be taken out. We can see that the London low was taken out at this point. And what I do is go down to the 1 minute time frame, and essentially I'm looking for a reversal pattern. And my favorite reversal pattern is an IFVG. So now we can see we had two IFVG. We had this first one right here, and we had this second one right here. Now, this second one here is actually the first presented fair value gap after market open. So it's very important. But I marked this one, and that's why I marked the both of them, because if we can see price break above both of them and have some sort of retracement, that gives us a high probability trade to enter. And as you can see, I took an entry up here, and it ran all the way up and came back down to this inversion fair value gap. And what you can see right here is that price reacts and respects this inversion to the T. And that gives us the confidence to enter this trade. So when you enter, when I took this buy, My initial TP1 was here, this zone, which I marked out here. And let me take off this ORB. And I already took out the positions here. So the second and the final TP is this one, but I still feel like this has the potential to keep rallying up to this draw on liquidity, which is the previous week's high, or even this high right here. It's very, very obvious. So I'm still gonna hold my positions, but as you can see, we're almost full TP. This is a 255 ticks trade, so it's a very good trade. It's if you manage your risk well and your position sizing is good, you could really get some good returns on this. However, today was a bit tricky because, as you can see, after we had this retracement down here, we had this sort of consolidation and the choppiness in the price action. But eventually, the price went where it was supposed to go, towards the draw on liquidity, which is the London high, which is still getting to at this point. It's still 12 p.m., so PM session for New York is just getting started, so it's nothing. I'm pretty confident that we're just gonna keep rallying bullish throughout the session. But yeah, that's the primary thought process that I go through. So I'm just looking out for session ranges and opening range breakout, and I'm trying to align the both of them to give me the kind of setup that I'm looking for. So most people would have taken a shot after this opening range breakout, which clearly closed below. But due to my experience and knowing how this market operates, having these session ranges as well gave me the insight to not marry the bias of selling. And also, if you remember, I spoke about the higher time frame bias, which is bullish. So having the higher time frame bias telling me that price is bullish gives me more confidence to hold this trade, gives me more confidence to enter a buy. And so that's why I took this setup, and just wanted to do a quick recap. Thank you for watching.